Hey traders, Jason here from Levitt Brothers. So in this video I'm going to talk about trade entries. It's going to be similar to other videos I've done in the same category. I've made the point numerous times over the years that if you want to be a trader, find something that works, something that clicks with your personality, and then study it, practice it, collect examples of it to create some sort of like chart library, and then study them. Grab your laptop, go out to a bookstore, go out to a coffee shop, and go bar by bar, chart by chart, and actually study them. And then, once you get comfortable doing that, eventually, obviously, you're going to actually place some real trades. So this is something I like to do every couple weeks, pull some charts out of my own chart library, show them to you, go bar by bar, tell you what I see. And I don't expect you to be able to copy me. I don't expect you to like everything I do, but if you could pull a nugget or two out and incorporate it into what you do, that might be the missing piece to get you over the top, okay? And then once you find something, relatively simple that works for you, that works in general, then you just practice it, study it, rehearse it, get good at it, okay? A good trader who executes like an average strategy is going to do really well, okay? But a bad trader who executes a great strategy is not going to do well, okay? The missing piece in all this is the trader himself, herself. So you don't need a perfect strategy. What you need is find something simple that works and then actually practice and get good at it. And it's the practicing and getting good at it that's going to make the difference, not having a better strategy, okay? If you're a guitar player and you want to get better, you don't search the world for a better guitar. You actually just practice with the guitar you have. The guitar you have is probably good enough. Okay, so I'm going to show you what I do, how I operate, how I think. If you can grab a nugget or two, that's great. All right, here we go. All right, so here is CONL. This is the leverage version of Coin. This is a 2-hour chart. Okay, what I do is I use RSI 12, MACD, just the standard default settings, and stochastic 5.3. I have them on all my charts, on all my time frames. Up top here, I have the 8 and 21 EMAs, and I have the 50 and 200 SMA. All right, so what we got here is, and I should pre-qualify this, that CONL was a stock that I liked anyways. Like, this is the 2-hour chart that only goes back a couple months. If you use the daily chart that goes back 6 months, I liked the chart. It had moved up. It was in the process of pulling back within an uptrend. So I had pre-qualified it as a stock that I liked. So anyways, we have this move up here. And during that move up, the RSI moves from a low up through the middle, up through the center line, to a decent level. The MACD crossed up, and the stochastic had already crossed up. So that tells you something's going on. Then you have this fade here. And what I want to do is during the fade, I want to see minimal damage done to the indicators. So during that fade, the RSI comes down, basically touches 50 and bounces. And the MACD does what I call a kiss, where the lines kind of come together and then they expand apart again. And we get a cross with the stochastic, okay? So what I like to do is find stocks that are doing well, that there's a really good move that gets the ball rolling. Then you have a counter move, but during the counter move, you get minimal damage done here. And then I want to play that second move. Oftentimes I miss the first move because I'm not really paying attention, because it's, even though it's a strong stock overall, it could be weak in the near term. So the first move gets the ball rolling. The counter move, minimal damage is done, and that's my opportunity to buy a dip within a newly formed uptrend. And again, we got the kiss here and the cross here. All right, let's go to the next one. And then with this one, you got lucky on Friday because the stock went straight up. That doesn't happen that often, but still the setup was there. All right, here's Nano Nuclear Energy. All right, so what we have here is you got, first of all, obviously it's trending up on the left side of the chart. It spikes up there, third week of May, comes back. So we have lower lows over here. You got higher lows over here, so we got positive divergence. And and then we got this move up like over here. And during that move up, the RSI kind of breaks out here. The MACD crosses there, and the stochastic was already, higher highs, higher lows. Okay, so that tells you the ball is starting to move to the upside. Then you get this fade here, and during the fade, the RSI comes down, finds support at the 50. MACD kisses, stochastic crosses. Okay, so that's my signal that I can get in. In essence, you have a move up that's here that gets the ball rolling, and then the fade against it tends to be lighter volume, lower volatility, and then minimal damage done with the indicators, and that tells you that first move was a real move. Now the stock is just fading back, and we want to buy that move. And as you can see, it moved up here, moved down one more time. It happens, okay, but I'm still showing this to you as an example because the trade was still there. All right, here is ONDS. All right, so stock was basing here, and as you can see, came out of a base here, get the ball rolling, comes down here, finds support at both the 21 and 50-day moving average, and then it continues up. And during that time, you have the RSI comes above 50, comes down and tests 50, and then moves up. The MACD was trending up. The two MACD lines started to converge together, and then they expanded apart, at the bottom here. And then you have the stochastic, which cycled down and signaled back up. Okay? It's all there. It's all there. The first move kind of gets the ball rolling. Then there's a fade, and as long as the fade, lighter volume, like as I said, hopefully volatility contracts, minimal damage with the indicators, that fade could be bought for the next leg up. Next up, quantum computing. All right, so here you got strong stock moving up. In consolidation mode, you have this move up here, and during that move up, you get the RSI moves up, you get the MACD crosses up. Stochastic was already at high level. Then you have this very minor fade right here, and during that fade, the RSI comes down, puts in an obvious higher low. MACD, for this is a 2-hour chart, it crossed down 1 2-hour period there, but then recrossed. It's basically a kiss where the moving averages come together and then expand apart, and then you have the stochastic, which cycles down and then cycles back up. Okay, so you get the strong move up that gets the ball rolling, and then a fade, and then another move out, and during that time you get the RSI moves up, comes down, either it finds support at a higher level or it flags sideways. The MACD crosses up and then kisses, and then the stochastic close to the same time crosses up. So you got a kiss over here, cross over here, RSI acting well. And of course, the backdrop of this is that it's a strong stock anyways. I've made a decision on like the 2-hour of a longer time frame, like the hourly, like the daily chart, that, hey, this is a strong stock, I want to buy it. I'm looking for a pullback with it. I'm looking for a little bit of a pullback within an uptrend. Here's Rocket Lab. This is more recent. Okay, stock's been kind of all over the place, like big ups, big downs. As it's coming down over here, we got lower lows over here. We got higher lows over here. So the stock we got positive divergence here. Then the stock moves up. Okay, over here, stock moves up. You get the RSI breaks out here. You get MACD crosses up. Stochastic is moving up. Then on this pullback here, okay, so the first move gets the ball rolling. Then we get a little bit of a fade here, which I've circled here on the 17th. During that fade, the MACD lines converge together a little bit and then expand apart, and the stochastic cycles down and recycles back up. Okay, so you get the first move gets the ball rolling, second move is the opportunity to buy a dip, and then you get a move out of that. Pretty simple stuff. All right, here's SMR. Okay, stock really doing really well. The entire group's doing really well. So stock moves up, it's fading back here. You got lower lows here, you got higher lows here. So you're kind of giving a hint that we're probably going to be turning somewhat soon. Stock moves up here, and as it moves up, you get the MACD crosses up. The stochastic, which was basing, crossed up, and then the RSI double bottom there and then crossed up there. Okay, so that gets the ball rolling, and I'm assuming you're not already in. I'm assuming like you're just looking at this like on this day, looking for an entry. Okay, so the first move here crosses up, then you get a fade here. During the fade, the RSI comes down, finds support at the middle line. MACD kisses here, stochastic crosses here, and then we get the second move. Okay. Overall, what I like to do with the MACD and stochastic is the MACD is the trend, and the stochastic is a timing mechanism within the trend. Okay. So whenever you have a consolidation pattern, if you're wondering like when you should buy, the MAC, as long as the MAC is trending higher, wait for the stochastic to recycle, to cycle back down to a low, and then that's your buying opportunity. All right, one more. Here's TSS daily chart. So the stock was kind of flat here, no big deal. Started to trend up here. Earnings came out, they blew them out. Obviously, you can see that stock did really well. Then we got this rolling kind of double bottom pattern, and then it ramped up again. So during that pattern, you have RSI moved up, faded back, but didn't do too much damage. It just kind of based here. The MACD, which obviously with this gap up, the indicators are going to all be moving up. MACD ramps up, okay, distance between the two lines getting bigger. But then during this double bottom, these contract together. This cycles down and then crosses back up, and then this eventually breaks out to a high. So you could identify this as a strong stock, up-and-coming stock. It's in the data center group. You want to buy it, and you're wondering, like, how do I figure out my entry? How do I time a buy? Well, you use like stochastic to like time your entry. This gives you another layer here where the two lines contract, and then they start expanding apart. RSI flags and then starts to move up again. So it's all there for you to get some buys in here. And then after that, it's just trade management. It's just putting a stop in place below the most recent low and then standing back and let it go. All right, so that's all I got for you. Just find a simple strategy, something that works, something that kind of clicks with your personality. Study it. You should have like a chart library with hundreds of examples where you can study, go bar by bar, chart by chart, and look at them. And doesn't have to be confusing, doesn't have to be complex. Just a simple system is all you need. Okay. Again, like with the guitar analogy, like a really good guitar player who practices with an average guitar is going to be great. But a bad guitar player who has an amazing guitar is going to be a bad guitar player. Okay, it's not the guitar, it's the player. And I think a lot of times traders spend too much time trying to find the perfect system, and what they actually should be doing is just practicing what the system they have. That's probably good enough. All right. Hope this helps, and I'll see you next time.